The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White at 1044. Now, David White at 1044.
And welcome. Exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. One more day into the breach, dear friends, and boy, do we have some fun going on out here. I think I've been given an early Christmas gift out here with this nice little pop in the market. We'll talk about that. But we got to get going out here. And, of course, what are we most interested in? Well, we got a Greek deal, and we got a miserable 18-point pop in the S&P. Well, I think I'd go to the window and complain if all we could get was 18 points. This is supposed to be the deal of a lifetime. It's going to save everybody. And we know that only thing that it is everything is awesome.
Everything is awesome.
Nothing could go wrong. Everything is perfect. Well, anyway, I suspect that this is a gift that we'll keep on giving. We made a ton of money last week in the daily newsletter, even covered some of our long-term shorts. I suspect that we are getting another gift today. And the reason why? Volume. Well, you know, we've got this big move here. Everybody's supposed to be bullish, and we got caca. Can I say that? For volume. 1.86 billion shares so far on the New York Stock Exchange consolidated tape. And what am I looking for if this was some kind of blow off and we were going to really rip this market higher? Well, I'm kind of looking for about 4.5 billion shares by the end of the day, maybe even 3.7. We're on cue here for about 3 billion shares. So again, a day without any real confirmation. Of course, we did get into that 4 billion range last week on the downside. So why can't we do that to the upside? And we'll find out. Can the market go higher? Sure. Can it go lower? Sure. Does anybody absolutely know with certainty which way? No. But I always like knowing that when I come in the morning, I'm thinking that maybe we've got 100 points down in the S&P and maybe 18 points higher like we are at now. To me, that is the asymmetrical bet. And the problem is that most of the time you're going to be right betting on the 18 points, but you're going to be a lot richer if you have asymmetrical bets out there for the time that you find the pothole in the middle of the road. 2095 on the S&P cash, up 18 points. Again, my problem, the infinitesimal and disgustingly small volume number, 1.87 billion shares as we start the day. Now, can volume come in later? Yeah. And as Mr. Keene said, when facts change, will I change my opinion? Yes, sirree. As Jesse Livermore used to say, there's no bull side to the market. There's no bear side. There's just the right side. And so far, I have nothing to contradict me being on the right side, being short. I know a lot of people were thinking that 2100 was the low, then 2180, then 2170, then 2050, and then 2040. But we got some volume, and you could say it was a washout. You could if we started having volume today. We've had 3 days higher, and the volume has not been that exciting so far. Of course, it's summertime trading, so could we just go sideways for a while and neither the bulls nor bears be right? That's also an option. But for me and my model, we are in one of the most dangerous markets that's out there. Now, come, I don't know, January, I'm not going to worry a whole lot about hurricanes hitting Florida. Middle of summer, water's warmer. I'm a little bit more worried about hurricanes hitting Florida. Huge spikes down with lots of volume. I'm worried about lower prices. Spikes up with light volume. I'm worried about lower prices. So for me right now, it continues to be an issue where I know everybody is fairly bullish that almost everybody that was short is covering their shorts right now, which means that there aren't a lot of people on the short side of this market, which means if it goes down, it's going to go down a whole lot more than it goes up. Of course, we've got a bunch of people that were buying at those highs. And of course, they're going to be glad to get their cash back if they can at 21.15 or 21.30 or something like that. They're going to be glad because, of course, they went down to 20.40 or 20.50, whatever the low was last week. And they're going to be glad to get their cash back. So there's going to be a little upside resistance. And if we get a surprise, probably not a lot of support on the way down because, again, markets get dangerous when there's no shorts. When there's lots of people that are bearish, then that's it. But the market does not show that. But we continue to see big men of the Wall Street selling a lot and a lot of their shares. Of course, we're going into earnings week this week, starting in earnest tomorrow night. I may dig something up during the break on that, but we've got a lot of earnings. But one of the other points that we're going to get to is the price earnings. And I've got a little clip from last quarter where everybody said that the market could only go up. And it's even worse now. We'll talk about that too. In the meantime, we got to get started and get the show rolling and get it fired off with a little bit of histoire.
That it's all just a little bit of history repeating.
That's wrong. I think it's in 1891. Wells Fargo was founded in San Francisco. Let me change that right now. 1891. Wells Fargo was founded in San Francisco and Sacramento by Henry Wells and Mr. Fargo, William G. Fargo. I wonder if he knows they named a movie after him. To convert gold dust into cash for miners, as well to transport and safeguard letters, gold nuggets, and other valuable byproducts of the California gold rush. Of course, they've turned into a giant bank and probably the premier bank, at least in quality, now in the United States. It kind of took a turn years ago. I think mostly because they didn't have as much exposure as the rest of the banks did in the downturn. They just fared much better. Anyway, 1891, Wells Fargo was started. Other things going on, of course, I'm going to say muted responses so far in the Eurozone. The DAX closed up 1.5%, FTSE up 1%, CAC up 2%. This was supposed to be the deal that really turned Europe around. 1.5%. I think we've been seeing this on rumors. The actual truth, maybe not so true. We'll talk about that also in a minute. Of course, Asia, very interesting out here. I got some facts and figures that are very interesting. Right now, 52% of the stocks in China's stock market are trading. 1,300 stocks are halted, but it's up 2.4%. HSI up 1.3%. But, of course, all the dogs are not in there. What if we just threw out all the stocks that were down today? How much would we be up? Interesting concept. Let's just count the winners and forget the losers. Well, certainly that's what's happening in the Shanghai Exchange. Want to welcome back Tom O'Brien from vacation. I bet he's probably pretty happy right now if he's looking at the volumes, just 1.9 billion shares on the New York Consolidated Tape. He will be on directly after this show on most of TFNN.com. But to me, what is very interesting is that, of course, if they discount the winners, we are still not over 4,000 on the Shanghai. And that's what they're doing, just counting the winners, not the losers. But he did bring up a point on his show at 10 a.m. this morning Eastern time, and that is how many of these big companies like Goldman Sachs are now trapped in these shares of stocks that they've been buying and will not be able to get out for 6 months. Well, there's two sides of it. One, the retail holders over there in China that own these shares will sell. And of course, there's nothing that these big men of Wall Street can do. The other thing is that, of course, you want to sell when you can, not when you have to. How about when you can't? I brought this up, I think, a couple of times over the last couple of weeks when I was scared to get stuck into an ETF that we were short and made a lot of money on, by the way, in the being short the Chinese markets. But to me, the problem is, what do you do if they don't let you out? And I still haven't heard an answer from anybody. I called yet again today to the ETF companies, and no one will tell me what happens if they shut down all the markets for, say, a year. Am I trapped in their ETF? Will the ETF open? Are they going to take the hit for China's stock market? The other things of interest, of course, are the newspapers over in Asia, especially in China, talking about going after short sellers and identifying companies like Goldman Sachs. What if they just take all the shares of Goldman Sachs, put them to money heaven? Because, of course, Goldman Sachs illegally shorted stocks. That's what they're going to say. Maybe they did, maybe they didn't. I have no idea. But the problem is there's nobody to go after, no courts. And probably if you're an employee of Goldman Sachs, you hope that they just don't take you out into the woods and shoot you, or out into the rice paddies, more likely. I don't think they really have a lot of woods. But that is it. What do you want to be doing? But to me, playing the Asian markets, especially China right now, is Russian roulette. You can wake up any day to find out that they've changed the rules on you, and the house always wins. Donkeys, we talked about them last week, and if you're playing poker, you don't want to be in with a bunch of people that can't play well, because a lot of times things blow up in your face. Of course, according to today, the Greeks have made a deal with the EU and the IMF. I am dubious of it. One of the reasons I'm dubious is that there have to be 6 votes. Count them, 6. I'm the counting count. I need to get the counting count out here. And the Mr. Counting Count says 6 different votes. Just for the Greeks, we've got 18 countries, I think, that have to have a 2/3 vote in the EU to pass all this. So there's a lot of things that can go wrong yet. And one of the thoughts that I had is, after looking through this deal with the Greeks, basically the Germans made them sign a deal that said that you will comply or else. This deal is very much like wearing a ankle bracelet on parole. And we'll get into exactly why this is, but boy, if you think people were squealing last week, I think people are going to find out what's in this in the next day or two. We'll find out what the Greeks have to say about it then. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, back onto Greece out here. Kind of interesting. I've got just a quote up here from one of the Nigerian brothers, although I don't know which one it was. I never can keep them straight. One should cut off the ponytail, and then I could say ponytail boy or no ponytail boy. But anyway, it seems that I, of course, wouldn't say boy in front of him. Both of them are pretty big monsters. Anyway, it seems that the Greeks and finance ministers truly believe they could once again fool global bankers into lending the money with a little more than a promise to repay the same. In other words, the Greeks were playing the lenders for fools. And I kind of said it in my newsletter this morning. Basically, this agreement puts a parole kind of ankle bracelet on them to figure out whether they're doing what's right. And my guess is it's not going to last long. What we've seen in the past, of course, was that as they raised taxes, more and more people just avoided them, outright said no, and went to using all cash. They had to go after the credit card vendors for Visa and MasterCard to get taxes, any taxes paid. No one believed that they had to put any money in. It was always everybody else's job. But one of the other parts of this job, which makes me think it could blow up in everybody's faces in a microsecond, is that most of the jobs in Greece have to do with patronage jobs. And this deal would basically be the equivalent of us scrapping the TSA Can you imagine what political party would yell and scream about busting a union here in the United States? In this case, they work 10 months, get paid for 14, get to only work 7 hours a day, and of course, retire at 50. Now, when you go into Germany, especially over the weekend, I continue to see, when I read the German magazines, continue to see that at least the politicians there will probably have probably the equivalent of our 2014 election with a change of government that will be huge if they vote for this. And I'm still not sure that even the Germans have the vote, no matter what they say. It would be great for Merkel. It would be horrible if you're a politician other than Merkel. She gets to have her legacy. You go back in the unemployment line if you're one of the other ministers running, because, of course, you have to explain to all the other German populace why you get to work another 5 years to pay for the Germans to retire early. In fact, there is no discussion in all this text about what age you can retire in Greece. So there's still a lot of open question marks about what happens. And it's not like there's just one vote and that's it. They have to go through 6 different votes in the Greek populace. And of course, 18 countries in Europe have to all vote, and they have to get to 2/3 of the countries all to agree. Not just a plurality, but 2/3. And I tell you what, when I look at this, there are a lot of politicians that would rather have a job than have the Greeks in there. And 2, even if they're in there for 6 months, because my guess is, or even less, 3 months, my guess is the Greeks will do this for a month. They'll get all the cash, and guess what? They'll be like all these other cons out here. They'll cut the ankle bracelet off in a month and throw it in the trash, and that will be it. There's just no way I see that this ever working for long. I may be wrong in the short term. I don't think I'm going to be wrong in the long term. But that's it. We'll see this. Of course, the vote for the Greeks is not till Thursday. That means they will not be getting any cash before the EU countries have a chance to vote. So that either means Sunday or Monday if they come in. Of course, if you know anything about Europeans, they've all wanted to be on vacation forever. Probably the only thing that would get this thing through is, in fact, that they all want to go on vacation. But that's probably the only thing that I can think would get everybody out there. But from what I can read, it looks like a drubbing and probably looking for another job. Maybe all the Greek or the German politicians will all get jobs at their banking companies over there if they bail them out one more time. But my guess is that we've got a ton of things that can go right, or excuse me, a ton of things that can go wrong, and only one way that things can go right. And that is kind of the heart of asymmetrical trading. And that is, if this deal goes off, we probably have a very minor high or higher move in the markets. And we can always wake up 500 points down in the Dow. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the Chinese curse is said to be, may you live in interesting times. And man, there is just so much going on out here that I think is interesting in the markets. The first one is a little bit of deep and maybe shallow insights.
And now, deep insights and random thoughts.
I don't go to Subway, used to, but kind of interesting. Of course, we had the news with Jared last week, but I went by a Subway because I was stopping in next door to my insurance agent, so I had to stop by and give him a check. But I thought it was very interesting because I'm going by and I see this giant poster in their window. And, you know, the joke's always been that Taco Bell is the one that is, or the restaurant that caters to stoners. But I saw this, and maybe you'll see it too. I didn't find a picture on the web, but big poster in the front window. And it's about one of their sandwiches, and it says, in a bowl or rolled. And all I could think of is, I mean, when you looked at it and you looked at the poster, all you got to do is say, okay, they're marketing to stoners. And I wonder if this is not a trend that's coming out anytime soon. But it certainly seemed to me almost obligatory stoner advertising. I know a lot of movies have been successful going to that. And I'm wondering if Subway isn't moving on to that kind of thing this week. But just a random observation. Other things going on out here. I wanted to look quickly at TAN to see how it's doing. A lot of people were talking up alternate energy last week. And one of the things, this isn't directly this, but it is interesting to me. And that is, and it's up a little bit, what's going on with and in Australia. Basically, over the weekend, we found out that Australia is yet the next country that is cutting severely its subsidies to energy. Last year, we saw, going into the last fall, saw that Germany was radically cutting the amount of subsidies that they had for solar cells. In fact, it was over at the end of the year. Australia has about an $8 billion a year budget to push this stuff. The rather new, I think he's 1 year old, Prime Minister of Australia has decided that he no longer wants to push it. He says, you know, we put some $35 billion into alternative energy. My guess is that if it's not ready now, it's never going to be ready. And he's cutting all money for windmills and some other stuff. And there's some stocks that I follow, and I suspect the real reason that we saw those stocks start to tank last week and in the last week or so was that they're directly responsible as suppliers to windmill companies. But sustainable energy looks like it's going to drastically change in Australia. They were one of the biggest to be pushing it. So keep an eye on it. No word on solar cells yet, but apparently in Australia, this is kind of like the United States. This was a giant slush fund for the other political party, and him cutting this is basically cutting off a lot of cash that would find its way to the alternate party, as most of these things are economically unviable. And my guess is if he does cut off money, we're going to see the windmill business probably go to a rapid close in Australia here soon. We talked a little bit about China, and I had some numbers out here. I don't know if everybody's been catching them. 52% of all stocks are not trading in China. That is 1,300 stocks. Funny that Blackstone also came out today, the big hedge fund. They're going to be selling 1,300 homes. That 1,300 number, pretty popular today. If you read and dig into what Blackstone's saying is these homes aren't in their demographic for being able to rent out for a long time. If you want to read a little closer, they don't like which neighborhoods these things are in, and there's too much housing around them at competitive prices. So they're going to start dumping 1,300 homes over the next couple of months. That may put a little pressure in some neighborhoods, but they're some people are saying they're redlining. You know, I guess if they sell at the right price, maybe there's somebody on the opposite side of that in the market. But they're trying to trim down a lot of these homes that they think will not be paying them back in the long term. We talked a little bit earlier about just a lot of these companies like Goldman Sachs and others that have a lot of cash in the China markets. My thought on that, the velocity of money. This is dead money to them now. They can't sell that. They can't make more money on it, and they can't go out and turn anything around. They're stuck in it. And one of the big arguments for economies has been the velocity of money. What happens when you can't move it no matter what? Just another random thought out here. Of course, the IRS today was very interesting to me in that they have thumbed their nose at a district court judge who told them to cough up all the emails on its issue. We've got a similar issue with the Department of Homeland Security in about 2 weeks. I'm wondering if there are any market implications when the same thing happens, which is that they're going to be asked to, or going to be asked why, and basically the judges are summoning the heads of these cabinet level departments to tell them why they've ignored court orders to provide information and or fix things. And of course, that's interesting. Today at 3 o'clock, I don't know if there will be any implications for this in the bond market, but Puerto Rico is meeting with its creditors. You may see some movement in the bond market on that, depending on how it turns out. I haven't seen a lot so far. I'm not real good at telling people how that would change, just that we at least have the first data point coming out between Puerto Rico and its creditors as they meet today at 3 p.m. 50 cents, the rapper, is claiming bankruptcy. I guess he's really worth 50 cents now. At least that's what he's saying. Sounds like he's trying to avoid some kind of lawsuit. Statistical noise, one of the other things that is in my random thoughts for today. In fact, I was just talking about it, I think Friday. Yeah, Friday after the close on Friday. I was talking to a gentleman at the bar. I was eating dinner, and we were talking, about statistics, and I brought up one of the things that I thought was very interesting because this gentleman was a rescue swimmer for the U.S. Coast Guard. And basically, he was trying to keep a bunch of young men from jumping off a bridge where there was an abutment about 8 feet or 9 feet below the water that they could not see. And we've had about 5 or 6 of these people either buy the farm or end up in the rest of their lives in a wheelchair for jumping off the bridge. A lot of signs saying, hey, there's no water down there. But I guess they can't read or they're drunk, and they continue to do it. I said, well, he was talking about statistics, and I said, well, one of my favorite statistics out here, explanations, was a ad that ran for years. And I don't know if you remember it, but it was for peanut butter. And they said, Jiffy peanut butter, pound for pound, as much protein as a steak, which is all great. But guess what? If you eat a pound of peanut butter, what you're going to do? You're going to be blowing chunks for probably the rest of the weekend, as maybe you can eat 2 or 3 ounces of peanut butter on a sandwich. But I don't think you can eat a 16-ounce jar of peanut butter at one sitting. And that's a good example of why you have to really look at statistics to figure out what people are saying. The one I equate with it today is Apple. There are a lot of people out there throwing everything against the wall to see whether it sticks. Part of this is that Apple accounts for 92% of all smartphone profits. Why that number is probably wrong to begin with and bogus. It is not uncommon to see a huge amount of this kind of discussion when a stock like Apple that is heavily owned by Wall Street comes into a downturn. We've got basically a 382 retracement today out of Apple. Not a lot of volume so far. What do we have out here? 25 million shares compared to 78 million shares when this blew through the previous lows with extensive volume. Now we've popped back up here, and of course most of this is on a plethora. There's nobody better than Apple at running the PR machine. But my guess is that we have probably a very good chance of hitting 113 to 115 gap, where this gap actually popped up on the 28th of January of this year with 146 million shares. That gap probably going to get tested now. Maybe we do a 0.5% retracement in Apple. But my theory, at least on this, is that Samsung has already seen what Apple is going to see in the near future, and that is a glut of people at the very high end of this market. There's also the belief that there were 2 things that were going to make Apple go way higher. One of those was China. We find out now that their sales are pathetic in China. The other thing was the iWatch was going to make them huge. We found out sales were nothing, and of course that's what pretty much smacked Apple down last week. But could you move a little higher out here? The answer is yes. But we already have the beginnings of an ABC down. One of the things that you don't want to see, and I've talked about it in my newsletter this morning, is how many of these stocks that went up came down on probably the same energy that they went up on. At best, you can talk about a trading range. At worst, you can talk about maybe a little consolidation before these things break down yet again. I suspect that Apple is headed for that 113 to 115 area, and I'm betting on it. Let's go back and check on this markets real quick. And to see, 2095 on the S&P cash, up 19 points with 2.05 billion shares. And we all know what that is. Yes, it is. It's a very wimpy for volume out here. We wanted to see, like I said, I'm thinking this sets up for maybe 3 billion shares, maybe 3.2 billion shares, but going to be extremely light compared to just a couple of days ago on the downside. Other things of interest. Do I have everything? No. Just interesting to see an escaped convict threatening a presidential contender with that. I don't know if you've caught the news here lately. Very interesting to see El Chapo warning Trump to shut his mouth. And I don't know if you can get any better advertising if you're Donald Trump than to have a drug lord threatening you. But we'll see. It is interesting. Anyway, we're going to get to charts now. I got a little bit of time here, just trying to catch up on all my random thoughts of the weekend. But we got a lot of stuff going on. Again, probably the biggest thing I'm looking at is how many of these stocks either came down with similar energy, even though they did have lighter volume at the lows, and more likely came down with higher energy with lighter volume at the lows. So we're getting that first little bounce out of these markets on it. But I continue to see stocks that have troubling volume, at least energy on the way back up, and troubling volume on the highs. One of them is Toll Brothers. This thing came out and tested the May 19th high, $38.96, 3.4 million shares, with 2.5 million shares on July 6th. Kind of tried to get back up there, pulled back a little bit. We're up today with 552,000 shares into that 3.4 million share. Watch this very carefully. Other stocks of interest, I got to probably get two more in before the break, is Ford. All I hear about is how the sales of cars are just going through the roof. What do I see out here? A test of the previous low on higher volume. July 29th, we had a $14.30 low with 40 million shares. We went to it with 42 million shares. It went 3 cents below. We came back into the trading range. But again, a lot of energy to the downside. So probably the best you're looking for is consolidation off these lows. But my guess is you're going to test that 1427 sooner than rather than later. And for a business that's supposed to go to the moon, everybody's buying a new car. It's troubling to see Ford out here at lows. General Motors, of course, had news. It's also at the lows. And, of course, the sky's the limit. Everybody's just buying cars. If you watch financial infotainment, it just can't be any more bullish. Why is this thing down here sucking wind? It's blown through the previous low. It did it with volume last week. $32.36 on the January 29th low. 15 million shares. We blew through it on the 8th with 29 million shares. We're kind of popping back up here. But General Motors is cracked. It cracked. And again, a volume increased and energy increased into those lows. We'll be back in a minute. Lots of stocks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we have email out here, and it's from somebody named Andy in Las Vegas. Anyway, he's asking about my call on GDX. And one of the things I've been talking about is just how a lot of these charts look at here, and that is that we busted lows with lighter volume. But what we didn't do is come down on less energy, i.e. from the GDX, this May 14th high, $21.21, had more energy than the leg up from March 11th to that May 14th high. And was it a ton different? The answer is no. But until I start seeing volume really decrease on those legs that head back down, I'm not looking for an extensive low. And normally what we see in those kinds of moves is consolidations. These things need to go a little while and bore everybody out of them. I don't like the fact, if I wanted to be short a lot of these, I don't like the fact that they busted these lows on lighter volume. In this case, you had 66 million shares up against 72 million shares. Wasn't like this thing busted it with half the volume. The volume was still light. So I think you can give a lot of credence to at least temporarily lower prices. I don't see I'm not wanting to go short gold stocks here. I am probably at best ambivalent to them. I just don't see any patterns really setting up that tell me this is going higher. So if you wanted to go long or you wanted to go short, it's fine. I just don't see a great deal of money in either side out here until we get this consolidation over with. Will it consolidate lower? It may. I would rather be long this thing for a move from 1,000 to 1,800, which I think will probably get back up to 18 or 1,900 again. But at the moment, I continue. This is just the same pattern I've seen in the whole general market, and that is that the energy has still been either the same or more to these lows. Sometimes you get lighter volumes down at those lows, but I want it to be congruent. I want to see this last leg come down with very light volume, test the low with lighter volume, and I'm not getting that. I'm getting kind of the same energy up and the same energy down. At highs, we have lighter volume. At lows, we have lighter volume. And that's telling me more than anything else, a range-bound market. And the question is, will they use the upper part of the range that we're in the S&P right now to sell? They did last month. We had the biggest selling come into the market since 2008. Will it be different in this sell cycle for hedge funds? I suspect not. I suspect, especially since they can't sell out of their positions in China, that guess what? If they're going to raise cash, it's going to be cash here in the United States, which will make things even worse for them. We also have two other things that I look at every day. And of course, that is the dollar index, which right now is printing off at 96.78. We also have to look at the 10-year yield, and that's right back up there. So without a real move in those, it's hard for me to see that we're going to have some kind of giant move. Volume still remains light as we finish the show with 1 hour left. 2.1 billion shares, which is wimpy volume so far. Maybe the volume comes in at the end of the day, but it is not worth a lot here as we close out the show. Hang on for Tom O'Brien for the next 2 hours. Welcome him back from a well-deserved vacation. And he'll be on for the next 2 hours on most of TFNN.com. In the meantime, sell when you can. Don't be stuck in Chinese stocks. Not when you have to. Or not when you can at all. See you tomorrow. Same bat channel, same bat time for the Power Trading Hour.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.